What could be the biggest economic story of the year so far? US and China are on a collision course since the 2nd of April 2025. Feeling the pinch of high prices at the store? Worried about your investments tanking in this trade war chaos? Well, hold on to your wallet, because the US and China just dropped a game-changing deal in Geneva. That's slashing tariffs by over 100 percentage points. But is this a real win for you? Let's break it down. Here's the deal. On May 12, 2025, top U.S. officials like Treasury Secretary Scott Bessent and Trade Rep Jamieson Greer sat down with China's Vice Premier He Lifeng in Geneva. After intense talks, they released a joint statement announcing a significant agreement. US tariffs on many Chinese goods, potentially including some fentanyl-related items, will plummet from a whopping 145% down to 30%. And China's tariffs on U.S. goods will drop from 125% to just 10%. This 90-day truce, starting around May 13th, could mean cheaper goods and a boost for your investments. Both sides have also committed to a new regular consultation mechanism, aiming for equal-footed dialogue and to avoid future escalation. That could mean cheaper goods and a boost for your investments. But here's the catch, your pain point. Not everything's included. Electric vehicles, steel, and auto imports. Yes, those are significant exclusions. We'll also think PC parts, critical semiconductors, and certain medicines. They still face separate, often higher tariffs. And this deal only lasts 90 days. Will prices really drop for you across the board? Or is this just a temporary fix? Businesses are scrambling and investors are on edge, wondering if the trade war is really over or just hitting pause. There's much more beneath the surface. This isn't just about these specific tariff numbers. This is a major development against the backdrop of those broader Section 301 tariffs that have been in place for years. China's fighting to keep its factories humming after a reported 16-month manufacturing slump. But this also brings concerns about China's industrial overcapacity, especially in green tech like EVs and solar, potentially flooding global markets. The new consultation mechanism is vital. But these deep-rooted issues are still simmering. So what's in it for you? Stocks are soaring, global markets jumped. Global stock exchange floor bustling, auto stocks rising headline. S&P 500 highest since March 3rd. NASDAQ best since February. US dollar strengthens. Gold prices fell as concerns about a global recession subsided. Lower tariffs on included goods could mean cheaper gadgets, clothes, and other items, easing that budget squeeze. But with only 90 days to lock in a long-term fix, and with a U.S. election cycle in 2025 potentially limiting bold moves, plus ongoing USTR tariff reviews, you need to stay ahead.